What's up, you guys? It's Nick here,
Sean.
and today we're gonna have another video for you. As you can see, we got new mics, so hopefully the audio quality gonna be a little better.
Yeah, we noticed y'all's comment on the audio, and we agreed. So here we are.
So today we're gonna be talking about the company called Redfin. If you haven't watched the video that Sean posted in the beginning of the week, please go ahead and check it out. Sean covers all the business aspects about this company and really gets deep into the valuations and things like this. But given the low rate environment, we just kind of thought it would be a good topic to talk about real estate today. And there are a lot of people on YouTube talking about real estate. So
Always.
Yeah, exactly. But we wanted to kind of have a financial twist on it. So with that, Sean, give us a quick 1 minute intro for Redfin.
Yeah, so I decided to do a video on Redfin because one, I'm very interested in them. Two, I'm up a lot in their stock. So full disclosure, I am a Redfin owner, so there is a little bias here.
I noticed those percentages on your video. That's pretty impressive.
Yeah, I had some calls, or I still have a couple, and I have a lot of shares, so I'm very happy with their performance. Now, just a little overview of what Redfin is, in case you don't know. Redfin is a technology-based real estate player. Their main focus is their brokerage services. They're a little more innovative than most brokerages in the fact that they're technology-based. They actually started as a mapping software way back in the day and stuck with the brokerage model as opposed to data services, but we can get into that a little later. Basically, they have three business lines. They have their brokerage services, and then they have their mortgage and title, and then they have their iBuyer program, which is extremely interesting if you haven't heard of this new industry. But basically, I think they're going to take real estate by storm along with a couple other players, and I'd like to dig into it a little further with you.
Well, that's pretty strong statement for a company that's... Well, how long they been in business, by the way? How old is this company?
Early 2000s. I want to say like 2002 is when they were founded. They actually started as a mapping software, as I just said. And they were one of the first to actually map out real estate listings data-wise. Okay. And they really didn't know what to do with this. But when Kelman took over as CEO in 2005, he had that conflict of interest I was just telling you about, where he didn't know whether to go and monetize this data that they were collecting or make something real out of it. So he kind of took it the brokerage route, whereas people like Zillow took it the data route, where they were selling advertising services to different agents and other local offices. And it's a lot easier to expand that way because you don't have to know as much about the local market when you're just selling data to people that already know about the local market. So this was a really challenging decision for Redfin, and it hasn't really paid off until recently, but it's paid off very well recently. So yeah,
that's a very cool distinction that I think you're really getting into in your video, where you're explaining that Zillow has a very different business model, and Redfin is really going onto this brokerage market that hasn't been innovated for centuries, I guess, or something. But you mentioned on the, something about the CEO, and I listened to the last quarterly call. This guy, quite an interesting personality, I guess. So what do you know about that? How long you've been following the stock, and do you have anything positive to say about this guy?
Well, I wouldn't say I've been following the stock for a long time. Actually, Glenn Kelman is one of the reasons I stumbled into the stock. So living in Houston, as I'm driving around, I've seen some Redfin signs in front of homes, and I'm just like, okay, well, it's just another real estate broker. I mean, they look kind of clean, but it's just another broker. Now, then I think I said, or I heard something about them on like CNBC, and I'm like, okay, who are these guys? So I dig into them a little more. I ran across like a TED Talk from Glenn Kelman back in like 2013, where he's describing how more software developers need to use their software for real things as opposed to just selling the software as software, because real businesses are more and more becoming software companies. and software companies are more and more becoming real businesses. So you kind of have to leverage whatever technology you're using to make real money. And that was his approach. So as opposed to selling data like Zillow, he took the hard approach at the time, which was to try and become a real estate broker and try and redefine real estate.
Okay, so do you know if Zillow been in business for longer than Redfin, and how do they compare stock-wise or performance-wise?
I don't believe they've been in business longer than Redfin. Now, since they took what I call the easy route, where they sold data, and since they're able to partner with existing agents in local markets and kind of leverage their local know-how and like whatever they're listing and everything, as opposed to trying to convince people who are listing their homes to sell on their platform, you don't really have to do that with Zillow, because Zillow is just a useful tool for people that have already been listing homes and are already experienced in such. And then you just kind of collect data from what they're doing, as opposed to going out and trying to become the broker and trying to convince people to sell on your platform and things of that sort. You grow data a lot slower, but they've been around, I believe, a lot longer. So they have that advantage, but it leads to a lot slower expansions.
Gotcha.
That's why they're only in 90 markets, whereas Zillow's in, I believe, many more.
Okay. Well, I guess we're going to wait for a few years and see if we're going to actually win the real estate game. But it sounds like Redfin really trying to disrupt the market versus just playing along with the brokerage.
I mean, I don't think it's a zero-sum game. And I think the company's two business plans are actually converging quite a bit. But the thing I would use to distinguish Zillow and Redfin as far as their business plans is Redfin, well, I just said, took the hard route and they became a broker early. And that was not easy for them starting off. When they were raising venture capital from like 2006 to 2010, they were laughed out of the room by like 100 different funds.
That's a great time to raise money.
Yeah, they're like, okay, well, how fast can you scale? Like everyone wants you to be Facebook, Google, whatever. Yeah. And they're just like, oh, well, we can't scale very fast because you just have to be disciplined. But the point is, now that they're both entering the iBuyer market, which I can expand on later, they are crossing paths in the way that they're both trying to sell homes that are now part of their own inventory. And it's a lot easier to do that when you're a broker versus a data service provider that provides data to other people selling homes. So Zillow will leverage their customers, aka agents, premier agents in specific, to sell their inventory. Whereas Redfin, they just use their brokerage services that are already in house, and it creates a synergy between the business lines that makes a lot smoother transition into the iBuyer market. Specifically, and makes them not have to piss off their existing customers, if that makes sense.
Well, it sounds like, Zillow has this conflict of interest with their customers as far as, they would be more incentivized to sell their own houses, right, than selling someone else. And Redfin here clearly just saying, this is our inventory and we're going to sell it. And, they're not dependent on the advertising model as Zillow would.
Yeah, so Zillow has a bit of a conflict of interest with their customers, but it's not as big as you think. So Zillow partners with premier agents to sell their homes. So the premier agents get a nice commission, maybe not as nice as if they were listing a house on their own. But it's basically like a nice free lead, or not free because premier agents pay Zillow, but they have opportunity to take these pretty much, I guess, leads or free clients, like listing clients, which is what Zillow is to them. And it benefits them in that sense. Now, as they take a bigger and bigger percentage of the market with their iBuying program, I don't know how much that'll favor real estate agents. But at that point, I don't know if it'll really matter for Zillow. And now I'm not trying to dog Zillow because I think Zillow is a great company. I kind of wish I owned them as well as Redfin. I don't know why I don't, to be honest. But
are their stock looks like this as well? Is it up a lot?
It's not up as much as Redfin because Zillow's kind of been in the spotlight for a while. But I mean, they're up quite a lot, and especially I
think everyone is up a lot in this market, right?
Right when they dropped their earnings this afternoon, they were up like 10% after market. So I'd say that they're doing pretty well.
Okay, gotcha. So, well, you touched a few times on the real estate brokerage and that Redfin is really trying to be a broker. And before, I watch your videos, I had no idea what the broker is, and I never sold the house, I never bought the house, and that's why it was very foreign for me and for our viewers. It's basically the intermediary who helps either a buyer or a seller, right, to go into a transaction and make it a little quicker. So people still can sell their houses and things like this by themselves, as far as I understand, right? But or can they not sell the houses by themselves?
What do you mean by sell their houses?
Well, like if me and you just want to have a transaction, do we have to have a broker between us, or can I just sell you a house without any intermediaries involved?
Honestly, I don't know. I feel like most people don't really have the time to do that, but that's where iBuyers come in.
Gotcha.
Is if you don't want to have a listing agent, that's an option. You can get an instant offer on your house and get the cash within 30 days if you don't want to deal with a broker.
Okay. So, well, again, I guess where I'm coming from, we each sell apartments and houses to ourselves without any brokerage, because
I mean, there's a reason that people have paid real estate agents 3% on both sides for ages, is because selling a house isn't as easy as it sounds.
Okay.
I mean,
well, I hope one day we will learn about it, or at least I'll see the comparison to Russia. But how big is Redfin in the brokerage business? What's the percentage of the market that they currently have?
So market share is kind of tough to come by. Redfin has their own metrics as far as market share that I noticed.
The company has its own metrics.
Yeah, but I mean, I feel like all companies do. It's just, it's not necessarily talked about. I just noticed this, especially when I was on their earnings call, where one of the analysts who was asking questions asked about their, it's like their market share and where it's heading. And they're kind of like, oh, we have our own data on market share, but we decline to disclose this and everything. But anyway, according to FactSet, they have about 4% of real estate brokerage and related services.
Okay. And do you think that they make any money in the brokerage business right now? How profitable is it?
Yeah. So their operating margins range from like 25 to 35%. And I think this will remain constant, if not expand in the future, just with their technological advantages and the efficiencies that come along with that. Mm-hmm. I don't know the exact figures, but their per agent efficiency, or I guess like the amount of revenue they make per agent is substantially more efficient than other real estate players, if that makes sense.
Yeah, I think it kind of does, because if they have a platform where just, people come and generate leads and have all this software advantage that I feel like some brokerage firm can have a website, but they're definitely not as popular as Zillow or Redfin, and that makes perfect sense to me.
Yeah, I mean, I won't discount the work that Redfin agents do, because they hire a lot of talented people, but I mean, as you can imagine, if you're selling homes, would you rather be selling homes that are on this very intuitive platform where people like you and me will just easily log on and search the neighborhoods we like and look at a nice map and be like, oh, I like that house. Oh, here's the agent. Okay, I'm going to call him. Versus the typical like pushy real estate agent that you kind of think of that's kind of really clawing for clients and just cold calling and posting on different sites and everything.
So I have a few friends in the real estate business, and they've been telling me that real estate is all about connections. And, the brokers who really kind of being successful in it, they never change their number, and they always, have referrals from other people. And just because of this personal connection, people are able to sell houses, and it's much more important that being intuitive platform on a website. And I think people of older generation definitely prefer to know someone in person. So what do you say to those who think that personal brokerage is much more important than just having an online platform that can sell the houses?
Well, I mean, personal connections are great and all, but I mean, look at finance, like, versus your like that financial advisor where you're like, oh, I trust this guy, I've met him, I shook his hand, I had a beer with him, versus now there's a bunch of robo advisors and there's ETFs that charge 0.1% and manage your money for fractions of what other people do. And that's what Redfin's doing with real estate. Not only do they have this intuitive platform, but they also charge a 1.5% listing commission as opposed to the industry average 3%. And at the end of the day, people like you and me, I feel like most people around our age and even older, they'd rather just log onto a website to go check out homes to buy. And when they're ready to sell, they just want, okay, well, I saw how easy it was to buy my house. I just logged on online. I didn't need a buyer's agent to go show me around. So why don't I just sell on here too? Because someone like me is going to come along, and pricing is just getting more and more efficient as more and more people like Redfin and Zillow and Opendoor and all them come around. So why would I pay someone 3% to do this job when the market is becoming more efficient? I mean, the same way active managers become less relevant in finance, the more efficient the market gets, the less relevant it is to pay an agent to sell your home.
I think it makes sense. Okay. So let's switch gears a little bit and talk about the mortgage business. You mentioned that, they also able to basically finance the mortgages to people who come to their platform and have like being kind of one-stop shop for everything. How big is the mortgage business and how much money do you think it generates profit-wise?
Profit-wise, it's kind of hard to tell exactly because they're in a pretty high growth stage as far as their mortgage and title business is concerned. It's pretty young, not too young, not as young as the iBuyer program, but profit-wise, it's kind of hard to tell. But usually like a mortgage originator, like someone that will find the lendee and then sell off the mortgage to a financial institution, or sometimes they just refer you straight to another bank because they can't cover everyone. But
do they get a commission?
Yeah. My point is they make like 1% on about each of these.
Okay. And I think an important point is they don't have all of those mortgages on their balance sheet. They just package it and sell it to the financial institution. So there is not a huge risk, right? Yeah.
So they keep a very minimal amount of mortgages on their books, and it's not like they're trying to keep them there. It's just the way things work. So at any point in time, you're going to have some mortgages on your books just from the natural flow of people getting mortgages on your site. But they ran into a little bit of trouble during COVID. They kind of had to sell their mortgages off at a discount to the mortgage-backed securities or the institutions that made the mortgage-backed securities. But their hedge against this was betting against the mortgage-backed securities. I don't know in what fashion, but thanks to good old Jerome Powell and the Fed buying up all these assets like mortgage-backed securities and corporate debt, the mortgage-backed securities themselves, while they were only buying mortgages at a discount because of the inherent risks involved with COVID and like the financial system possibly collapsing, they were like, okay, you have to give me a discount on these mortgages. But at the same time, since Fed was buying all these mortgage-backed securities, the price stayed high. So their hedge didn't really serve its purpose. But that was a very brief moment for them.
Gotcha. So you mentioned COVID. How they going through this period? Are they suffering and seeing less listings or seeing less people looking for the houses? Or is it high and they just cannot keep up with the demand?
So there's good and bad with this. Good thing is COVID actually very much helped their business. So I'm sure if you've just watched CNBC like any day between now and March, they've kind of touched on this move out of the cities. So people with like expensive houses or apartments in New York City, like it's a ghost town. People don't want to live there. People don't want to live.
It's just scary, Me growing up, I always wanted to live in New York, and now like everyone's saying I'm gonna never come back to this city. I was just like watching to some financial managers today talking about having all the meetings online and never wanted to go back in town and stuff. That's scary.
Yeah, I always thought about working in New York, but I don't know if that's gonna happen anymore. And if it does, it'll probably be cheaper. But the thing is, I don't think the same like prestigious jobs will necessarily be there anymore. I mean, they will, but not exclusively.
Stock exchanges don't move, I feel like. And
yeah. So, I mean, finance will always be in New York.
Yeah,
I mean, the south side of the island will always be a bunch of finance dudes walking around and girls. But I mean, like it's exciting place. Like we've been to New York a couple times. It's exciting. But I don't know. Things are changing. I don't know.
So going back to the COVID and how it benefited.
I'm getting off topic, but anyway, COVID really helped their business because people are flocking out of the cities. When they flock out of the cities, they want homes, and that's Redfin's main market. While they sell condos and things like that, their main breadwinners are homes and townhomes and things of that sort. So with mortgage rates super low, Fed slashing rates, people just want to buy houses. And on top of that, the home is your new office. So instead of spending 8 to 12 hours a day in an office and then just coming home to sleep, whereas probably a lot of investment bankers in New York are doing, so they don't really care if they live in a box. All of a sudden, they're doing all their work from home in this little 400 square foot apartment in the sky.
Yep.
And they're just like, why am I doing this? This is like a prison cell. I want to go buy a house. I'm making a lot of money and I just work off my laptop. Why am I paying $4,000 a month?
Okay.
So
they've seen more listings, not more listings, but more people coming and looking for bigger houses, which I guess benefits them.
It's a double-edged sword because a lot more people are trying to buy a house, and that's true. And because of that, like inventory is being bought up. But the other side of that is not many people are wanting to sell their homes, especially now. Because I mean, who wants to move during the middle of a pandemic and have people walking through their homes and all those things that come along with it? So inventory has dropped, demand is raised. So not only are low interest rates driving home prices up, but also the supply demand effect of people not wanting to list their homes right now because that's their everything. Everyone's staying home.
Okay.
And then there's a bunch of people wanting to buy. So
okay. So do you think it's a temporarily move for people, in the pandemic, not wanting to sell the houses, and we're going to go back to normal at some point?
I mean, I feel like there's going to be a lot of transactions regardless. Now, it may be a little bit slow on the listing side soon, but Redfin doesn't just do existing homes. They do new builds as well. So there's always that. And then I'm not exactly sure on the long-term trends, but I mean, I can't imagine even with people making their home also their work and their everything, I don't think that would discourage people from listing their homes. Maybe if they don't have to move for a job, that's one thing. So that could drive down traffic, but I feel like more people are going to want to upgrade or they're just move locations and things of that sort. So I think transactions will keep about the same pace.
I hope. I'm starting to forget how the normal world looks like, and being trapped in the house all day is just different. So you mentioned interest rates a few times, and I'm wondering how the low interest rates going to affect the mortgage business.
For the mortgage business, I mean, it's just more people wanting to buy a house, first of all, and thus take out more mortgages. And if they're doing it on the Redfin platform already, they're more than likely going to take out a Redfin mortgage. But I think what you're asking... Wouldn't
their margins go down if now they can charge less interest?
I don't know exactly how their fees are related, but yeah, I imagine if they're selling a mortgage with a lower interest rate to these financial institutions, they're probably going to get a lower fee. But there's a certain amount of that is fixed, and there's a certain amount of that is commission. I don't know exactly how it works, but yeah, as you imagine, if you've watched The Big Short, you see those guys down in Florida where they're like, oh yeah, I sold this like plumber a $1 million mansion at 8% ninja loan or whatever, and I got sick commission. Like, oh man, I just ripped his eyeballs out. Like, yeah, of course you're going to get higher commissions on higher interest rate loans. Yeah. But I mean, I think the main thing that drives their mortgage business is volume, not margin.
Interesting. Okay. Well, you mentioned RedfinNow a few times, and in the video you said that's what you bullish the most about. What makes you so excited about the instant buy program?
Oh, okay. So if you don't know what an instant buyer program is, Redfin Now and Zillow Homes, I believe it is, and OfferPad and Open Door, these are all iBuyers. And an iBuyer will offer you, they have data available to where they're very confident about what they can sell your home for, and they feel very efficient with their data. So they feel very confident offering you just a small discount on what they think you can sell your home for, and they'll give you an instant cash offer that you can pretty much, like if I go to one of these iBuyers and I say, I want to sell my house, they're going to give me an offer within like 2 to 7 days. And then I will get cash in my account within, at the latest, like 30 days. So if you're moving cities for a new lucrative job, or maybe you just don't want to deal with people going in and out of your house, especially now with COVID, or just keeping your house clean because you have a bunch of dogs and kids and you don't want to constantly be like, oh, don't leave your bowl on the table because we got an open house tomorrow or whatever. Like, people don't want to deal with that. It's stressful. And if they can just get out of their house now for like, so Redfin Now specifically charges, I wouldn't say charges, but they'll tell you what they think they could. So it's all a one-stop shop. This is the main thing about Redfin. So I'm going to back up for a second. Sorry if I go on a tangent, but Redfin will actually, their main thing is being a one-stop shop for consumers in the real estate industry. So they have their 3 business lines right up front. So they'll give you listing options. You say, Redfin, I want to sell my house. They'll say, okay, well, why don't you check out what Redfin Now will offer you? And they'll give you an instant offer on your home. But at the same time, they'll also tell you what they think they could sell your house for on the open market, were you to go with their traditional like 1.5% listing service, where, you know, you sell it like a normal real estate listing. And then they also have a level of service that's not in every market at this point, but it's concierge. Well, they'll charge an extra 1%, and they'll do home renovations, and they'll...
Is it a fixed 1% or is it fluctuates?
Well, it's 1.5% for the traditional listing service, 1% if you also bought a house through them. But I mean, I won't get into that. But concierge is 2.5% as opposed to 1.5%. And then they have vendors where they get preferred treatment on upgrades and home improvements that they think could increase the sales price of your home. So they'll give you the options for these 3 things: the instant buyer, the traditional listing service, and the concierge service, what they think they could fetch for your home. Now, if you go through the traditional listing service or concierge, that obviously expands your time frame a little bit. So you're trading time for the extra money that you may or may not get for selling your home. But the instant offer program is like, okay, they're taking a 7% discount on the price of my house. If I were listing with like a mom and pop Remax agent, I would get charged 3% on both sides by the buyer's agent and the listing agent. I'd pay 6% anyway. So you're telling me I'm just going to pay an extra 1% versus a traditional broker to sell my house now and get cash? And so not only does the process of selling your home take like 1 to 3 months, you also have like up to like a month waiting time after the buyer closes, because they still have to get all their paperwork processed by the bank, and like sometimes it falls through. Maybe their credit score didn't go through the right way, or maybe they didn't get approved, and then all of a sudden you got to start all over again. And you already told all the other prospects no, and it's a mess. So some people just don't want to deal with that, and they're okay with losing a little money on their house.
Well, I feel like, 7%, that's a big discount, to the most valuable asset, as you say, right? And that's why I feel, for me, if I'm not in a rush to sell, which is, I really get the liquidity appeal from this offering. But if I'm not in a rush to sell, I'm not going to give out 4 extra percent, on my house. And I feel like this is what's going to be maybe a barrier for the Redfin Now program, is that people just not going to be eager to sell at such a huge discount. And I'm thinking about, a good analogy here would be like selling a car. I could go to any of those Trivago platforms and sell my car right now. knowing that it's going to be a discounted price, I could, list it myself and, get extra 10% on the price of the car. And like, maybe it's only me, but I would never, have a 10% discount where I can make my money and get the full price for it.
Well, that's fine. And it really also depends on where your house is. So if you're in a very high demand market that has very fast turnaround, like let's say that houses aren't on the market for more than like a month or a couple weeks, odds are that discount is going to be a lot less than if your house is like way out in some suburb that's not very popular as far as people's interest for buying homes is concerned. So that may be more of a discount. Maybe they see a lot of improvements they can make, so they'll take some money off there. But like, the most it'll be is like 12%, which is a lot to your point. But Redfin's advantage here is that they offer those three things right up front. So you're like, oh man, I'm not taking 10% off my house. You're crazy. And it's like, okay, well, the reason that you see that 10% is taken off your house is because Redfin also told you that you could sell your house for X amount if you just go through the traditional listing process. So you're like, oh, I could sell it for $300 if I go through the traditional process versus $270 if I take the instant offer. Okay, well, I'll go through the traditional listing process. Thanks for letting me know the difference, Redfin.
Okay.
And to Redfin, it doesn't really matter because they capture the customer one way or another. And Redfin, at least at the moment, is not super eager to like gas up their iBuyer program.
Because I think I listened to their last call and it didn't sound like they're trying to put more gasoline on the fire there and expand the program to a bunch of different markets. Sounds like they're really trying to take it slow, which I kind of like the fact that they're not trying to, sell out all the inventory and they want to make sure that they sell it for the right price and stuff. So I see appeal there. And again, I think you're hitting on the point being one-stop shop for everything house related, which I think the biggest and the coolest thing about this company that they have so many ways to make money from you if you're trying to do anything real estate related.
They've got a big net and a fast-flowing river. So, and it's just going to get bigger.
Okay.
They're capturing the market.
But
you touched on a point of them being kind of slow, and you said you kind of like that. That's the conservative investor in you. I'm more aggressive. And Redfin, this is my one knock against Redfin, is they're not aggressive enough, in my opinion. Now, I trust their management to know what they're doing, and I like their management. I really like Glenn Kelman. He's a very zen guy, very open guy. That's what I like about him. He's very open to ideas. But anyway, without getting on a tangent, they just like, they're hiring very aggressively, but they just dip their toe in the water. They want to make sure they get it right in every market, and they don't want to tarnish their reputation at all. Whereas Zillow, you'll see a lot of stories about Zillow mispricing homes or like ripping off people or like, like their estimates are wrong and everything. It's because they expand so aggressively and they don't make...
Well, Wall Street wants the growth stories, right?
Exactly. And that's what I like about Zillow is they're very aggressive in their growth and they want to go balls to the wall in their iBuyer program. They want to be the top dog in this and that and this. They want to be real estate 2.0 is what Zillow calls it. And Redfin, I think they're positioned better. And I think if they just ramped up their growth and their process a little more and didn't take it so slow, I think they could take a lot more market share, which is kind of frustrating because this is a key moment.
I think you and I are very different from the investment perspective, and I'm, as you said, much more conservative. And I think that's what I really like about Redfin is that listening through the quarterly calls and looking at their growth rate, I think their growth rates are still very impressive. The iBuy program like double or triple, right? And if they do it every time, I'll be more than 5%. But whenever a company is just being a WeWork of the world and trying to be in every state and every country, that's where the problem starts, I think, and that's where at least I'm being a little negative about. And it sounds like there are a lot of positives with Redfin, and you're very bullish on the company. Tell us one negative that you really dislike except of that.
I mean, yeah, that was my main negative, is they're just not aggressive enough, because they have a huge opportunity in front of them and they're positioned very well. They are one of the key technological disruptors along with the other people I named. But yeah, I just like, when COVID hit, they furloughed a ton of employees, a ton. And then as they realized, oh my gosh, COVID is actually a plus for business, we actually need more agents than we had before, they frantically started hiring people back. And they got most of their agents back, like 80 or 90% or something. But I mean, they started off behind right there. Zillow didn't lay off near as many people. In fact, I don't know if they made a substantial layoff at all. So they were ready. As soon as the housing market came back strong, they were ready. And Redfin wasn't. And that's not to say they didn't take advantage, because they did. They took advantage to their full capacity, but their full capacity was reduced because, in my opinion, they weren't being aggressive enough. But
I got you.
That's
You're
my
all
main
about the
knock.
growth.
But in specific with that, I don't think they're aggressive enough in the iBuyer market, which is the real reason why I'm super bullish on the stock. Yeah, they've got a really nice brokerage program and mortgage program, and they make good margins on it, and it's very scalable. But the iBuyer market is the future of real estate. It's going to turn buying and selling a home. It's going to be as easy as buying and selling a stock. Like, you just log on. Oh, you're already pre-approved for your loan because you put in your information earlier. Oh, I can make an offer just like that. Or boom, oh crap, I got to move this month. I'm going to post my house real quick and get an instant offer. And the instant offers are just going to be closer and closer to what they think they could sell your house for on the open market, because there's enough iBuyers in the space to where it's competitive enough to where people are just going to shrink that discount that they're taking on people's homes.
How hard is it for the new players to get into iBuyer program? Is this data very hard to get, and it takes, years of experience being a broker or a lister or like Zillow, to get that price kind of history, or can they buy this data from anyone?
Well, I'd say in the past, it was a huge advantage to be able to collect this data firsthand, as Zillow or Redfin does. Zillow more so because they're using other agents, not just themselves. But the data is pretty readily available now, either for purchase, or Redfin even just offers up all their data for free on their Redfin data center.
Sounds like too generous.
You can go log on right now and go check out some really cool housing data on Redfin's site. So I recommend you go check it out. But that's their thing. They wanted to be the real company, the people selling real things as opposed to just data. And I don't know why they offer up their data for free.
I'm like, this is like, Tesla offering their technology for free, which
I mean, like, if you think
I understand why, but if you're a broker and you're thinking about the iBuyer, like, I would keep that data to myself.
I mean, a lot of like internet companies and software companies keep their programs open source and everything. It's not to say that people can't rip them off, but they feel established enough to where they can make their data open source, and it actually helps them. So like, the more feedback they get from this data that they can't necessarily analyze in-house all the time, they see it as helpful. Okay. So I guess that's their perspective, but me personally, I'd probably try and monetize it.
Well, that's an investor or finance person.
Yeah, I'd try and monetize anything. So.
Okay. So the big question I think that everyone would be interested in watching this video is, should that they buy this stock right now? Mm-hmm. What's your answer to it?
I don't. That's a different question, because it's, do I buy anything that has ran up a lot in this market? I don't know. I don't know the extent to where inflation is driving up asset prices and all these other things. So that's more of a top-down approach. But as far as Redfin's concerned, I think being up like 100% year to date.
Are they up 100% at this point?
I believe so.
Okay,
at least 90.
Well, I guess the general S&P is up like, well, not year to date. It's
S&P is about even. The Nasdaq's up like
a little bit. Yeah, like I was just looking
10 or 20 or something.
Like since March, I think stocks went up by like
49%.
But
since the bottom in March, Redfin's up like 300+%.
Wow.
So I mean, they sold off pretty hard because, I mean, Redfin themselves thought that they were going to do bad in that environment.
Okay.
They thought people weren't going to be buying homes.
So should I buy the stock?
I'm dodging the question. I think I wouldn't say wait for a buying opportunity, but I feel like now isn't the best buying opportunity. I'm not saying there will be a better one. I think at best it'll trade flat for a little bit.
Okay.
So there may be a better entry point down the road where they're only up like 5% from where they are now, maybe like a few months from now. And maybe you say, okay, well, it's grown pretty slow relative to the market. I think now's the time to get in, as opposed to when it just peaked and it was growing very aggressively. But in short, just dollar cost average, honestly. I mean, buy little now. Buy like a fourth of your desired position right now, maybe buy like, I don't know, 10 shares or whatever your appetite is. And just continue to buy, maybe buy some more 2 months from now, and then 2 months after that. And just be opportunistic over a good time period. And I mean, maybe we should make a video on dollar cost averaging. It's really the best way to buy anything. Okay. But in the long term, I want to own Redfin. I want to be overweight relative to whatever benchmark you're comparing to. Because I just think they're going to steal a ton of share and they're going to create a bunch of share in a new market, the iBuyer program, and I want to be a part of it long term. And me, I have a very long investment horizon, so I'm comfortable just sitting on it for a while.
That sounds like a very clear position, and I will be honest with you. You pursued me to buy some stock as well, and it's
yeah, you've done all right. Yeah,
yeah. I like you. I have a not as long of an investment horizon as you are, but pretty long investment horizon. So I think from my perspective, it's going to go up in the next 15 years. So I might as well buy it now versus trying to time it right, which I never can do. Rather than that.
Well, I don't time it right either. I bought all my Redfin shares. I didn't buy them all at once. I bought them in like 3 or 4 different times from February to April, and I bought some at like 22 and watched it go all the way down to 15, and then I bought some more and I was like, oh yeah, I just got some at 15, and then it dropped down to 10 and I'm like, well crap, I'm gonna buy more, but like, am I wrong? Like did I mess up here? And I didn't, but you know, that was the point, is I got in at several different points. Mm-hmm. So it averages out to like, you know, I got like a 15 cost basis.
That's pretty good for a company with this growth potential. Anything else that you want to add to this discussion?
I would just really just keep an eye on their iBuyer program. Listen to their earnings calls, just see how aggressive they're being with it. Not only that, but just how profitable they'll become, because their true profitability on it won't be seen until later.
Yeah, apparently people don't need to make any profit in this market. Going back to Nicole's discussion.
Oh my gosh, don't even get me started. But long term, I love the company.
Perfect. Well, let us know what you think, guys, about Redfin. Would you buy it right now? Would you sell it? And also comment below if you have any questions for Sean and I. We really appreciate, this kind of conversations. As we said in the beginning, we do it pretty often, usually when we drink beer in a bar, but this is a more interesting, I guess, insightful discussions for us. Yeah.
And if y'all have any topics y'all want us to talk about, we have some videos coming up on some renewable energy companies. I won't name names, but stay tuned. As far as, and then also some fintech companies. So if there's any other industries, companies, just general areas of discussion, we're not just doing company overviews. Just drop them in the comments. We're going to try and get a forum going sometime soon, hopefully.
Yeah. If we get, I want to say 50 subscribers.
Yeah, we get 50 subscribers. We'll have a lit group chat for y'all.
So you can ask our opinion on should you buy different stocks and not live. Anyway, thank you so much, guys, for watching. Please leave a like. It means a lot for our algos and stuff like this. And subscribe. It means a lot for us.
Do it
now. Okay.